My name is Eija Watson and I own Houston Luxury Properties. Houston is my home and I have access to the most exclusive properties in the Space City, the real $1 million listings. I'm going to give you a close-up look like no other. Houston Realestate on Houston Live TV Network. This is Houston Live TV Network, and I am Eija Watson, and I'm owner of Houston Luxury Properties. Today, on my guest today, I have Rob Miller with Keystone Mortgage. Hey, Rob, how you doing?
Hello. Very good. Thank you for having me today.
Thank you. I just wanted to let my clients and the people that I work with and all the audience to know about mortgages. So what kind of loans, what is the best type of loan? What kind of loans are there, and what do you recommend for different people?
Sure. Well, that's going to vary quite a bit depending on the person and kind of their situation. So really what we try to do first is get to know a little bit about our client.
Right.
We're going to take an application, pull credit. Once we know how much down payment they can do, what their credit scores are, some of those things, we can get a little bit of an idea, but it's also important to know the overall situation for the client and, for example, how long they intend to live in the house.
Right.
Once we know all of that, then we can kind of try to point the client in the right direction on which loan is best for them.
All right. So what kind of different loan options do they have?
Sure. So one that's very popular that most people probably heard of is an FHA loan. One thing that is great about an FHA loan is it allows for a 3.5% down payment.
Okay.
You can have as low as a 580 credit score.
Okay.
So it's really good for first-time home buyers.
So first-time home buyers
that maybe don't have a whole lot of equity from selling a house and don't have a big down payment.
And what price range does FHA go to?
That will vary by county.
Okay.
So you probably want to talk to you, and once you know what client, or I'm sorry, what county you are in, you'll know what the maximum sales price can be for that area. So that will vary a little bit from county to county.
Okay. A lot of times my clients want to know about loan estimate. So what can you tell us about the loan estimate?
Well, so that is a great tool that certainly the client should get up front when they're comparing and trying to decide what lender to go with. It's hard just from talking to one person to another to know which is going to be the best deal, because someone might quote a really low rate, but then if their fees are way out of whack, it may not be the best deal. So ask for a loan estimate. It's going to put on paper what rate, closing cost, down payment, everything that the buyer needs to know to make an informed decision.
Right, that's awesome. So what about, so we talked about FHA, and then we have a conventional loan?
Absolutely, that's probably the most common loan out there. You need a 620 or higher credit score. If you're a first-time home buyer, you can put 3% down.
Okay. If
you have owned, and really I say first-time home buyer, but as long as you have not bought a house in the last 3 years, they will consider you a first-time home buyer. If you have, then you can do as little as a 5% down payment, and the loan amount can go up to $484,350.
Okay.
Which is actually quite a bit higher than it was just a few years ago. That amount just keeps going.
Kind of keeps going.
Up.
Okay.
Yeah.
And so what about we're at my listing, 15 Prim Valley Court, and it's in Woodlands, in Carlton Woods. And so most of the properties, they start from $1 million and they go up to $10 million. So what would you reckon for somebody that is looking for a larger loan?
So any loan amount over $484,350 is now going to be considered a jumbo loan.
Okay.
Underwriting's a little tougher on jumbo loans. They want a little bit more down payment, usually 10% for most lenders is going to be what they have to offer. They're going to want a little bit of money in the bank, what's called reserves. Debt ratios a little bit tighter, a few things like that. But I've got some really great products available, especially in the $484,350 to $750 loan amount range. I've got a loan that is underwritten more like a conventional loan, but the buyers will be happy to hear it's also priced more like a conventional loan. Rates are very close to a conventional loan, whereas most jumbo loans are significantly higher. So it's a really great product, if you can get the loan amount in that range. For those that need a higher loan amount or maybe don't have the 10% down, I actually do have a product available that does allow for 5% down payment. I've also got one that will allow for up to a 50% debt ratio, which is very unique because, like I said, typically they underwrite the loans a lot tighter once you go over that 44,350 amount.
Right.
This will allow for up to 50%. And then I do have a unique interest-only arm.
Oh, wow.
A lot of people are going to hear interest-only and get scared,
Would
and
that
that's
be
fine.
5, 7, 10 years?
Typically a 5 or 7.
5 or 7, okay.
Right. And what it'll do is it'll let you make an interest-only payment on the loan each month. And what a lot of people do is, there's some savvy investors out there. They'll take that monthly savings every month, invest it, and kind of let their money work
That's
for them.
very interesting, and I
So-
think that would be good for the higher end properties. That's what I can recommend. So one of the biggest questions as a realtor, they always ask me a question about what is closing cost. You don't have a down payment, but then they don't realize, they also have to have closing costs.
Right.
So what's included in closing costs?
Okay. Well, so really closing costs are made up of more or less 3 different kind of sections. You've got your origination is what it's called now. And that's going to be your lender related fees, underwriting fees, processing fees, that type of stuff. And those are the fees that the lender has a little bit of control over.
Okay, so you can actually help out and do things.
We've got some flexibility
Okay.
there. I mean, we've got our normal, you'll see most lenders charge anywhere from $1,000 to $1,500 between their underwriting and processing and some of their smaller things that, kind of add up. And when you're comparing an estimate, like we talked about earlier, that's really what you want to focus on is the rate and then the fees that the lender has control over.
Right.
We don't really have control over escrows or third-party fees.
So that's
but-
what the title company has.
Exactly.
Those fees are for the title company.
Exactly.
Yeah, thank you very much for that.
Well, and your next kind of section of closing cost would be your prepaids. If you're setting up an escrow, it's going to be the money that's collected for your taxes and insurance, and then your first year's worth of insurance gets paid at closing as
But
well.
is there also with the escrow fees, if you want to pay them, how do you, if you want to pay your taxes separate from your mortgage?
And if you do a large enough down payment, usually most lenders require 20% down
Okay.
to waive the escrow.
Okay.
I actually do have a lender that will require only 10% down.
Oh, that's
so that gives you a little
awesome.
bit of
Okay.
flexibility there. And if
Okay.
you want to manage that and control your own money and pay your taxes and insurance when they're due, then you've got the ability to do that.
Yeah. So I had an interesting. There's a commercial with Ricky Fowler, the golfer, and they're trying to do the mortgages, and it's interesting. They have all these. All these pronunciation? What's PMI?
Right.
What's escrow fee and all this stuff and short things. Could you tell me a little bit more about all those mortgage terms?
Sure. And I guess first of all, it kind of, I hear it in my office even. So I hear some of my loan officers every once in a while will throw out some mortgage jargon to the borrower, and it drives me crazy because most people aren't going to know what some of these things are.
Right.
So the loan officer should be doing a good job of explaining what he's talking about to where you don't necessarily need to know what these things are. But some of the things you're going to hear is PMI, which is a mortgage insurance that you pay as a buyer.
Right.
But it protects the lender in case you default on the loan.
Right,
So it's not anything you really want to pay, but it's a necessary
But that would
evil.
be for up to, that would be like 20%. You have to,
If you're doing less than 20%.
Below 20%,
right.
yes,
And then
right.
once on a conventional loan, once you have that equity in the home, PMI is something that you can get rid of.
right. Yeah.
There's also loan to value, which is simply how much equity do you have in the home. So if you're doing a 0 down payment, you're at 100% loan to value. If you're doing a 10% down payment, you're at a 90% loan to value. Debt ratio, very important in qualifying you for a loan. Debt ratio is just simply calculated by your gross monthly income in relation to your monthly debts that's on your credit report plus the total house payment.
Right,
So-
that's awesome. Hey, I really, really thank you. I mean, thank you so much. Keystone Mortgage, Rob Miller, and he is one of my favorite lenders, and you have saved so much money for my clients that I love referring you out because it's all about taking care of our clients. So this is all for today from Houston Live TV Network, Houston Real Estate. I'm Eija Watson with Houston Luxury Properties. Thank you so much.
Thank you.